Good morning, good afternoon, good evening from wherever you're watching me from. Welcome back to the channel, everybody. Today we'll be looking at price action trading. So what is price action trading? Price action simply means trading the price data on the chart. So you will make your buy or sell decision purely based on price data on the chart. So as a day trader, you're either going to look at 3 or 4 indicators, or you're going to look at purely price data on the chart, or you'll be combining indicators with some price action. But in this particular video, we are going to look at how to trade it purely price action trading on the chart. But before you can trade price action, you must understand price data and price movement. On the chart, candlestick represents the price data, and then the candlestick shape or the pattern represents the price movement on the chart. To understand candlesticks, you must know the open, high, and close of the candlesticks. So on the chart, you can either have a bullish candlestick or you can have a bearish candlestick. We normally represent green or blue with a bullish candlestick, and we want to also represent red or white with a bearish candlestick. But the color does not matter because the color can be changed. Okay, the color can be customized to suit your own preference. But you must understand how this candlestick open and how it close, their movement, which represent the price data on the chart. So with bullish candles, price opens from the down and closes above. So bullish candle, price opens from the base and closes above. But with bearish candles, price rather opens above and closes below. That's the rule for bearish candle. So the software is programmed such that when it sees price opening below and closing above, it colors that particular candlestick either blue or green. That's per your customization, okay? And also it's also customized to see that if market opens above and closes below, the candlestick will be coded right, red or maybe white. And all these colors can be changed with the property settings. So you can just change them anytime you want. But you must understand the concept behind this kind of candlesticks and their patterns and what they mean. So you knowing all these concepts will aid your decision making as a day trader to become profitable. To trade price action, you can either buy on a retracement, on an uptrend. Maybe the market is trending, so you buy on a retracement, or you sell on a retracement, the pullback of the downtrend. Or maybe you can also buy or sell using the range market, such that when the market makes a power move and pull back to the base, you enter your sell there and you ride the market up. So to trade price action, you can either trade price action in the trending market or in a ranging market. Very simple. So for instance, in an uptrend, you can buy when the market pulls back to a very important support area, maybe moving average, Fibonacci, or maybe a structural area. So when the market makes a power move and pull back to a structural area or moving average or Fibonacci level, then you can look for a buy signals and then you buy. The same happens in the sell market. In the sell market, when the market is trending down, making lower lows and lower highs, lower low and lower highs, when the market pulls up to a very important support area, maybe moving average or Fibonacci level or a structure level, then you can also look for a sell level and then you sell. But in a ranging market, the market can either range upwards, okay? You can have a power movement upwards or a power movement downwards. So what you have to do is that you have to wait. You draw your trend lines or your horizontal lines, and then when the market pulls back to that particular zone, you enter your sell quickly. In an uptrend market or a trending market, I prefer you wait for a confirmation candle. For instance, you wait for a bullish engulfing pattern, a morning star or a pin bar in a trending market, because in a trending market, you have to be very patient, okay? You don't have to be rushing. So you wait for a confirmation candle before you can enter your market using a trending market. So uptrend market or downtrend market. But in a ranging market, I don't advise you wait for confirmation candle, because in the ranging market, the market can be very erratic. So I don't advise you wait for a confirmation candle. I advise that you just put your buy order or sell order at where you want to sell. So when the market gets right there, and then you just take your trade and then you're out of the market. So the market will just log you in and you're in. You set your stop loss and you set your take profit target. Always make sure you set your stop loss and you set your take profit target before you even leave your charts. Okay? Don't leave your chart empty without setting any stop loss. The important thing is how much you're going to lose when the market goes against you. When the market goes against you, make sure you don't lose more than what you want to risk in that particular trade. Okay, so set your stop loss and then you set your profit target before you leave the chart or you go and do something else. But aside candlestick patterns, to trade price action successfully, you must also understand market structure. What is market structure? Market structure is the framework of the market or the market movement. So market structure includes support and resistance zone. Okay, trending market is also part of market structure. Demand and supply zones. So support and resistance zone, trending market, and demand and supply zones. Knowing this particular concept will aid you to make your decision better and also to analyze the market in a very nice way. So in a trending market, you can either wait for the market to trace back to a very important level like moving average or Fibonacci level. or maybe support and resistance area, and then you enter your sell or your buys. So for instance, on an uptrend, we all know the market makes higher power move, retrace, power move, retrace. And when the market come back to any of these important areas, you see a trend line there or a moving average or Fibonacci level, and then you take the market and ride the market up. Same happens on a downtrend. On a downtrend, when the market is making lower lows, lower high, lower lows, lower high, lower lows, the market is retracing back to a very important support area. Then you wait for the market to come and then you take your market down. If you are trading purely price action without using any indicator, as you can see on my chart, I'm using my indicators just to tell me the direction of the trend. But if you are trading only purely price action without using any indicator, then you are going to wait for the market to retreat back to a structural level. What is a structural level? For instance, when the market is making an up move, retrace, and up move, these levels becomes your structural levels. Can you see? Retrace back, so this becomes a structural level. You're waiting for the market to retreat back to a structural level, and then you enter your trade. So if you don't want to trade with any indicator, then you wait for the market to retreat back to a structural level. The structural level is part of the chart where you see the market retracing, okay, making support areas. That will become your structural level. So you wait for the market to trade back to the zone, and then you take your trade without any indicator. Assuming you don't have any indicator, then you take your trade. Or you wait for the market to trade back to a Fibonacci level or a very good indicator, and then you take your trade. So as you can see, the market was making a very power move to the upside, following the trend lines or maybe the moving averages, and you wait for the market to pull back and then you enter. You can enter here. This was a trade that you took a long time ago. Just want to show it to you. You can see my log. You enter, you take your profit target, and then you're out of the market. 1 is 2 and you're out of the market. Very simple. Or on a downtrend, same method applies. If you want to use moving averages, you trade with the moving average. If you don't want to use moving averages, you trade with a structure. So here, as you want to trade with moving averages, what do we do? I have to wait for the market to pull back. Can you see the market is making power move down? Can you see the zigzag indicator? Zigzag indicator. The market is making power move down, up, power move down, up, power move down, up, and power move. So as you can see, the market pull back to a very important level, the moving average. So as you can see, the market pull back to the moving average and give a bearish pass. So we enter our trade here, and then we edit our trade somewhere here. We take our profit 1 to 2 and out of the market. Or if you don't want to use moving average, you want to trade purely price action, then what you have to do is that you have to wait for the market to pull back to a structural level. And what is a structural level? A structural level is what I've already explained. Can you see support? Market came back to the zone, and then you get a confirmation pattern and you ride the market down, and then you just take a profit 1 to 2 and out of the market. But in the ranging market, you only buy or sell when the market retreats back to those very important levels. Like for instance, the demand and supply zone. As you can see here, we have a structure here. Can you see structure here? And we have a structure here. What are you waiting for? You just identify 1, 2, 3. That's all you need. You need just 3 touches. Then when market retreats back to this zone or retreats back to come and touch this level again, you enter the market. So here you can buy, you can enter your buy signal here without waiting for any confirmation. You buy here, and here you sell here without waiting for any confirmation. Because in trading market, in ranging market, I don't advise you wait for confirmation because the market can be very erratic. Okay, so in ranging market, that's what you do. You just identify 3 areas: 1, 2, 3. It means your strategy is ready, your setup is ready. Now you wait for the market to touch a zone either here or any of this zone. Like as you can see, the market came to touch here. So you enter your market and you take your profit down, and then you sell, you take your profit 1 to 2, you take your stop loss, and then you take your profit 1 to 2, you're out of the market. So here you would have gotten 1 trade here and another trade here. You would have gotten 2 trades in this particular ranging market. But you must know where to draw your support and resistance line, because in ranging market, the market can be very choppy. Don't go and draw your support and resistance line in the middle somewhere. In the middle somewhere, you're going to take a trade here, guys. Do you think you'd have been profitable? This one would have taken you out. So know where you're going to draw your support and resistance line. Draw it at the extreme end, okay? At the extreme end before you even think of taking a trade. But in a ranging market, the market can either make a pullback down, can either make a pull down, or can make a pull to the upside. How the market is going to make a pull to the upside, you don't care. Either it's going to be zigzag or whatever, you don't care. All what you care, the market is making a pull back down or pull the back to the upside. So what you have to do is that in a ranging market is that you have to make sure that you draw your good structure levels. That's all what you need. How many touches do you need? You need only 3 touches. So you need, for instance, you need 1 touch here, you need 2 touches, and you are waiting. You need 3 touches. After that, your setup is ready. So what do? You extend your lines. You extend your either trend lines or horizontal lines. You extend them. And then when the market comes back to touch any of those zones, then you enter your buy or enter your sell signal around any of those zones in ranging market. So when the market makes a power move to the downside, you wait for the market to touch the zone, and then you put your buy order. Your buy order here. Don't wait for confirmation, okay? Because in ranging market, the market can be very erratic, so I don't advise you wait for confirmation. I advise you just enter a buy or sell immediately where you want to buy or sell. So you enter your market here, you take a profit
1 to 2. Always your stop loss 1 to 2. As me, you are entering your market here, your stop loss somewhere 1 to 2, and then you take profit. So as me, you are risking $100. We must always make what? $200. Very, very simple. Okay. The same way, then the market also came back here. Assuming you extended your line and you were there that particular day when the market touches the same method. You enter your stop loss, your take profit 1 to 2 out of the market. You don't care whatever happened to the market, and your stop loss is what? The same way. So if you are risking $200 here, if you are making $200, you are still risking $100. Don't risk more than what you want to risk. So this is how you trade ranging market. The market will make power move to the downside, make another move again, and make another move again. So you just need 3. 1, 2, 3. Your setup is ready. So now when the market touches this zone, let me change the color. The market will either touch this zone or touch this zone, and your strategy is ready. So touch this zone or touch any of these. I think this one also came continuing to the upside and touch here. Would have also entered the trade here. By then touch it reversed, and as it's going to touch it, still didn't touch it and went back. So here is where you should take your trade. Okay, you should take your trade here or here, not here, not here, not here, because here and here and here are the moment where you want to validate your setup. So the setup will be validated when you get 1, 2, 3. Then your setup is validated. Now you wait for market to touch down again or top again, and then you enter your sell or your buy, and then you're out of the market. Very simple.
So these are the foundation knowledge you're going to need to trade price action successfully. So please go home, go to your charts, go to your computers, go to training desk and practice. Or you're also welcome to join my webinar programs where I train losing traders or new traders who are very new to the market to become professional traders and trade from home. You can join this mentorship program on your own accord, on your own choice. The mentorship program trains only 10 people, 10 candidates at a time. I just want to trade 10 candidates at a time, and it's in 3 phases, which is in 3 months. So phase 1, phase 2, phase 3. Phase 1 will have 2 webinars. We put you in a private Telegram group and a WhatsApp private group so that if you don't understand anything, you can chat, and then we explain to you, which has 2 webinars. Okay, so phase 1, 2 webinars, phase 2, 2 webinars, phase 3, 2 webinars. In this mentorship program, you're going to learn a lot. You're going to learn how to trade right as a professional trader. You know, watching YouTube video alone cannot make it profitable, because YouTube, we pick only the simple concept. Okay, we pick some concept and then we show you on YouTube. But in reality, when you're trading, when you go to your chart, you see that you can't make them all together. That's why you need a mentor. So you can join this mentor program. It's just $100 per candidate, $100 per month. You can just join, and then you just enroll and become profitable. But if you are working in Africa, you are from Africa, you are working in Africa, sometimes $100 is very high in the currency, so I've given a discount of 50%. So if you want to join the mentorship program, you are allowed to also join the mentorship program for 50% discount, which means you're going to pay $50. So $50 per month. So phase 1, $50, phase 2, $50, phase 3, $50. In the mentorship program, you also be taking 3 days intervals project, which means that every week you're going to do 3 days intervals projects. You are going to submit it, so those who are even working, you can still do it. It's in the evenings, right? So in the evenings, you come home, you do your project, you submit it within 3 days intervals. We give you another project again, you go and do it 3 days, you submit it back. It's going to be more of practical. Okay, so phase 1, phase 2, phase 3, and then within 90 days, you are a professional trader and you can trade on your own, you can trade from home, and maybe you can quit your job to become a full-time trader. So sign up and get yourself involved in the mentorship program, because watching YouTube alone cannot make you profitable. YouTube just give you idea of the concept of the trading market or whatever, but it's not going to make you profitable, because you can't merge all the right skills together. You watch my YouTube video here, you go watch another person's YouTube video, you go watch another person's strategy, and then you can't merge any of them together. So when you go to your chat, you see that you're not still profitable. So that's why I created this mentorship program, just a group of 10. So if you want to join, just register as quick as you want. I'm just going to train batches. Okay, so if you're not ready still, you can still wait for the next batch, but it's better you join the first batch so that you become profitable, because it's in a period of 3 months. So after the 3 months ends, then I'll enroll another 10, just 10, enroll another 10, train them, and then they also become profitable traders and trade from home to feed themselves and their family. So that will be all for this video. This is Owas, your mentor. See you next time. Bye.